I'm gonna be showing you one of my favorite strategies, the gap down dip buying setup, to demonstrate how I use supply and demand to plan my entry levels, my stop loss, and profit targets. You will never find a simple yet powerful trading technique than just trading with support and resistance levels. In this video, I'm sharing with you my personal technique to identify support and resistance levels that will actually improve your profitability in trading, whether you're trading stocks, crypto, forex, or even futures. And to truly help you achieve the results you're looking for, I'll be sharing with you guys how to execute a trading strategy based on support and resistance lines that we've drawn. So if you're ready for this Humble Trader Masterclass, then don't forget to smash the like button and share this video with your trading buddies. When you master these simple lessons, such as supply and demand, you can properly define these three things in your trade planning process: market direction, planning and perfecting your entry, planning your price target and your exit, and of course, using everything you learn to execute the strategy I'm gonna teach you in this video. Here's a quick recap of support and resistance. A support level is a level where more buyers came in to buy the stock than sellers. On a chart, it's gonna look like the stock bounced off the same level multiple times before because there's enough buying demand to support that stock when it's being sold off to those price levels. On the other hand, resistance levels are where sellers stepped in to sell the stock. So whenever you see the stock run to those areas in the past before, you can see that buyers decrease and there's more sellers showing up, and they decided to take profit or just get out of their existing position. And that's why it's called a resistance. Keep in mind, these support and resistance levels are not some magical lines that the stock candles just bounced off for no reason. These lines represent significant price levels that people have historically agreed to buy or sell. So we must make sure we chart out those levels because it's very likely that's gonna happen again. So let me show you how to do so right now. To start, go to the daily chart of the stock that you're looking to trade. And how I find these stocks to trade is usually on my daily gap up scanners. So if you look at the recent daily chart of Coinbase, it's gapped up multiple times in the past before. So that's the reason it showed up on my radar. I'm always starting from the daily chart because this gives me an overview of where the stock is heading to. Is a stock currently in uptrend or a downtrend? This very simple information is actually very important for short-term traders like you and I. Now looking at the stock Coinbase, this is a daily chart once again, you can tell that it's on an extreme uptrend. Ever since the stock broke through this 200 SMA, this orange line right here, you can see higher highs, breaking out through new highs, through these daily resistance, which we're gonna talk about in just a second, through all these resistance here, and you can see all these lows are getting bought back up. Higher lows, higher highs, and we're making new, actually 52-week highs right now at around 105s. And all of those signs point to a very, very bullish and strong uptrending stock. And if you want to learn how I scan and find these very strong stocks to trade, then comment pre-market down below and I'll share with you my entire morning routine in a video. Okay, now I'm gonna simplify the process of drawing support and resistance lines for you on Coinbase. The reason you should keep this technical analysis process very simple is because you don't want to be spending too much time trying to make sure all your lines are accurate and very perfect. And I'll go over why in just a little bit. So let me demonstrate the two very simple steps of drawing support and resistance lines to you right now. Feel free to find this Coinbase chart on your trading platform and follow along with me. Step number 1, find the most obvious price levels. To do this, just look out for the three most apparent things on your daily chart: the extreme highs, extreme lows, and any obvious V shapes and W shapes formed by the candles. So let's look at the Coinbase chart right now. We talked about the extreme highs and the extreme lows. Now, if you look at the last 2 years charts, then what do you see? You can see all these lines are sticking out here, here, And you can see obviously recently around the 109, 110s, these are the extreme highs. So you want to make sure you draw a line around that levels. Over here, recent highs, you can see the extreme part that point out. And now let's look at the extreme lows. What do you see here? You can see this V shape over here, that's an extreme low. And as well over here, you can see this V shape, and overall they form like a W shape, as you can tell from the daily chart. So you want to make note of that as well. W shape, V shape over here once again, another one down here, okay? Even though these extreme low levels, like the $33, the $50, they're kind of far from where the stock is currently trading at 110 area, we still want to do this exercise of drawing the support levels. Let's see on the daily charts, if you scroll through over here to the middle of 2022, another high here, you can see the wicks over here, and from the lows from May of 2022. So those are also, significant levels you want to make note of. So now we have the most extreme support and resistance levels. And here's the reason you want to make sure you're using the most obvious levels. They can tell you what prices the majority of the traders in the market is watching. You can see from the beginning of 2023 over here, that's where the stock broke out of, held that support, and went to break out to over $80. Once again over here in the middle of 2023, again in May, and this time around in June, that's actually the level, the support level, where everyone bought the stock with increasing in volume, which we're gonna talk about in just a second later in the video. But after the stock got bought back around the support, that's when it led to a huge breakout to new highs, to 110s. And vice versa, it's also very important to make note of the extreme highs, the resistance levels. You can tell over here, this area around like $84, $85 area, it's been tested many times. Here, 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 and here, right? Before, whenever the stock went to that 85s, it sold off and went lower. Once again here in February and April, but this time around in June, it shows you that the stock tested that resistance one more time. However, whenever you see an extreme resistance on the daily chart, this one over here got broken out of, such as this one in June, you want to make note of that because prior resistance, once broken out of, becomes new support. That's actually a strategy I'm gonna mention later in the video, so hold on tight. But for now, you just need to know why you need to make note of all the extreme resistance and the extreme support. So in a big picture, it's very important to make note of the most obvious price levels, both the support and resistance, because you need that information to form a trading plan to help you figure out when to buy the stock, your entry point, your price target, and your risk management areas. Moving on to step number 2, to drawing support and resistance, use the horizontal lines to connect at these 3 obvious points. So a very quick tip for you is to always zoom out on the daily chart. Like so, I want to zoom out on the daily chart to make it very simple to see where the lines actually connect. So you can identify all the highs and the lows like we had earlier and make sure that they connect at these 3 points. And once again, that $85, $84 area, you wanted to make sure it's been tested multiple times before, whether it's a support or resistance like this one, so multiple touch points. Another one over here, that $50, $51 area, and 64s. The more touch points you see on the horizontal lines, the better, as that means the level has been tested multiple times in the past before, and it's considered significant for other traders, bots, or investors alike. So if I was day trading the stock or short-term swing trading the stock based on the most recent performance, then the levels I'll be using will be that $100 support right here, as well as that 108, 110s resistance. 108 and 110s from this recent resistance area right here, and the support around $100 once again. And a bonus tip for you based on my prior experience is that you can try to line up your horizontal lines with the whole numbers, whole dollar numbers, such as 200, or in this case 110, 100, 108. People don't generally care about 10 cents, 50 cents, 20 cents that much. As human traders, investors, or bots, they're psychologically programmed to be more inclined to take note of whole dollar numbers. And one more note is that all of these areas, the price levels, are rough areas of support and resistance, supply and demand. They're not gonna be perfect and never gonna be exact to the cent. So that's why when you're drawing out these levels and planning them, you wanna use rough whole dollar numbers. Okay, so now that we understand the two very simple steps of drawing support and resistance, now here comes the actual practical lessons on how to apply your knowledge to your trading strategies. Now the first key lesson for you today is to remember to use volume as your guide when you're trading breakouts or breakdowns from the daily key levels. You can see all these bars on the daily charts over here down below. You should having any platform that you're in. The volume bars over here reflect the number of shares as bought or sold that day. Basically the daily transactions. So whenever you see a volume breakout such as this day and this day over here, that tells you these levels have a lot of interest, whether it's from buyers or sellers. And if the volume bar is green, meaning the stock is actually bought up and bought into. So those are significant levels that you want to make note of, especially if you're trading a lot of the breakout strategies. And this is the quickest way for you to analyze the strength of a particular support or resistance. So if you see this $85 over here, a lot of volume on this particular day, you can see that also lines up with the level over here on a high volume traded day from February of 2023, then that's how you could obviously nothing is perfect and nothing is gonna be 100% correct, but by using volume and analyzing the volume paired with your daily support or resistance, that tells you, okay, once the stock breaks out of the same level from before, the same resistance from prior with high volume, that a lot of times that tells you there's enough buying volume and enough buying demand to support an even higher breakout. So the stock is most likely going to break out even higher. So let's use these very recent breakout days on Coinbase, this day and this day here, for our demonstration on the strategies that I would use. So you can see on this huge breakout day with a high volume, you can see the stock actually held that support of $85 from the day before. And once that breaks out of the former highs around $92, that's when you see it's going to be a high volume breakout. Because number one, you held the daily resistance that should have been broken down, but it didn't. So when a resistance is broken out of, it becomes support. You can see on this particular day, the weakness that got bought back up and the stock squeezed. It was a pretty amazing squeeze and breakout. A lot of shorts got trapped. And once the stock breaks through that recent highs, the little resistance of from just 2 days ago, $90, $91, then it becomes a trend join strategy. Why is it a trend join? Because you don't have any clear resistance after that $92 until that 100, 101 area. Now the second day over here on July 14th, you can see the stock actually gapped down. So that's why you had the opening candle to be around 106 and you actually dipped all the way to 101. That's what we call a gap down. This is actually one of my favorite strategies to trade, and I'm going to show you later in the video, in which you're buying near the support area on a gap down day. So you're buying near support to sell at previous highs. I don't really like to trade breakout strategies, but I do love to buy the gap downs. So speaking of this gap down long strategy, that's actually what we're going to be talking about in the support and resistance key lesson number 2. So we are moving into the good stuff now, the actual application and execution on key strategies using the technical levels we talked about. We're going to be talking about trading on the intraday timeframes with your daily levels, as well as finding your levels to buy, sell, and timing your exits. But before you do so, if you're enjoying these videos on technical analysis demos and applying it into actual strategies, then please remember to drop a like and subscribe. I have a lot more video lessons for you coming soon. Now that you learn how to draw support and resistance in the 2 simple steps and using volume analysis on the daily chart to help with your bias, you are ready to create a trading plan using a trading strategy. I'm going to be showing you one of my favorite strategies, the gap down dip buying setup, to demonstrate how I use supply and demand to plan my entry levels, my stop loss, and profit targets. So let's finally have our intraday chart open on the side over here. I'm going to be using the 5-minute chart on the intraday chart and have the daily chart lined up on the left-hand side. So we're talking about this particular day over here, the day with a huge gap down, right? Which is this day over here on July 14th. Now, this is something we've talked about previously on this channel. You want to buy the stocks that had a strong breakout day the day before, and you want to trade the continuation the second day. So you can see on this day before, the day before on Thursday, this day here, you had a huge, strong daily breakout day, the one we talked about earlier, in which you broke out of $85, dipped and held that support on the daily, through the recent high 91s, and went straight to $100. So that's a strong day 1 that we're talking about. Now on day 2, you can see that $100 psychological mark, which is drawn from, that's a daily support level drawn from August of last year and then also May of last year. So if you line up that level on the daily chart, you can see 100 psychological level over here, and that also lines up with the little support consolidation area from the day before. This is what we call power hour. Around 2:30, 3 o'clock, you can see the stock consolidated around this $100 area. Again, not exact to the cent because technical analysis is not supposed to be perfect, like we talked about earlier. You held that consolidation area and broke out higher. So next day, with this huge gap down, that's the level I'm looking at. Okay, $100 is a stock holding that level. Now, pre-market, you can see the stock, again, didn't bounce off exactly to 100, but went to a low of 101.60s, within that range. That's a rough area we're looking at. So on pre-market that day, you want to see, okay, you meet criteria number 1, the day 1 breakout the day before, and criteria number 2, a gap down to roughly the daily key level you're looking at. Now that the 2 technical criteria is met, you want to start timing your entries and all your executions. So in the ideal world, you want to be using this daily key level 100 as your ideal risk and entry area. But obviously that's not gonna work in this case, because by the time we all wake up at around like this time, usually around 8 o'clock, 8:30, the stock is already trading around 105s. So in this case, you want to be flexible. So what I would do in this case is to use the pre-market levels. You can see pre-market, this thing sold off to 100, bounced back up to 106, and bounced out that 104.60s area over here. You can see this is the area the stock held, broke out of once, held twice. You can see it bounced off and bounced off again. So that's going to be the area I'm going to risk off. So if I'm using this pre-market low support area as my rough risk, let's say I get in around this 105s area. My risk is below that pre-market support. I wouldn't want to risk it all the way down to $100. So I want to keep my risk tight at around $1 per share. Now where can my profit target get me? Obviously, the perfect price target would be the daily resistance of 110s. So in this case, that means if I get in around 105s, risk 104s, $1 per share, I can get potentially $5 out of that trade. So the risk reward would be 1 to 5. Now, if you want to play conservative and you don't want to use the daily, the most extreme levels, you can use the pre-market area, which is also coincidentally yesterday's prior day's close, which will be 107s. So if that's the case, 107, 107.90s, so that means you'll be risking $1 per share, right? To potentially get a little bit more than $2. So making that trade, the conservative trade, risk reward of only 1 to 2. So that's how I would plan and trade the gap down long strategy using all of these technicals from the daily chart and as well as, if needed, the intraday chart. This gap down long strategy is a setup I use when the market sentiment is extremely bullish, which has been the case for Coinbase and a lot of other tech stocks, especially those involved in Bitcoin sector. If you want to learn more about this gap down long strategy, I actually have made a video previously on this channel talking about this in even more detail, so check it out if you haven't done so already. Okay, so now that you learned how to implement and execute these technical levels, you should also learn about these crucial mistakes you should avoid to truly improve your profitability. Number 1, remember these price levels are never going to touch exactly to the cent. They are not perfect. Treat these supply and demand areas as general zones of buying and selling. Generally speaking, the higher the price and the more volatile the stock, the bigger of the range it would be. Number 2, don't be in a hurry to jump into a trade every time you see the price touches your support or resistance level. My pro tip for you is to wait for at least 1 or 2 retests of the key level before entering the stock, whether it's long or short. Note this down. Always make sure you look for confirmation that your key level is indeed respected by the market. Number 3, yes, while it's very important and crucial to know the general areas of buying and selling, it's still important for you to assess your risk management. Basically, making sure that for every trade you take, let's say you buy at support, you can potentially get at least 1 to 2 or 1 to 3 or more. If you want to learn how to combine this technical key level lesson with many other strategies, whether you're buying or selling, then you should check out my technical analysis masterclass over here. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys in the next video.